So what I've got is a two candle rejection case study and a domino theory case study which comes into it. And yeah, so this is the monthly on ES. Well, obviously what you can see is monthly rejection on the candle, easy candle signs, and this is the clear big goal, no context. Weekly, you've got the context of this breaker and STH, SDL, with the fair value gap. Again, to here, this candle wasn't so big, so really I was looking in from the breaker's context. You're looking into the next candle. On the 1 day, this weekly breaker will be pretty key. We had this fair value gap on the daily, which failed to push up and create new ones. Right, so at that point you had unusual context, the lack of creation here, down to this daily mitigating sting would be where you would be looking to find your boundary, essentially. But this line represents, if you go back to the weekly, this line represents where you would not want to trade to if you were going to continue to create a weekly fair value gap. And so because that line on the daily, this daily mitigating sting, this swing low, is below that, if you trade to this, you then wouldn't make a fair value gap, and then you'd arguably trade into this daily fair value area, but below it, the weekly, which is more in context, so you can go all the way down to here. And then so on the 4 hour, if I actually just need the bar replay. So now that is a bit of the domino sort of context. What I had on the bar replay when I initially called this was this sweep, clearly, rejection candle, continuation. So that's the classic 2 candle rejection, and create a 4 hour fair value gap. And then out of it, I was looking to short to here, it's 4 hour ITL. And this ITH wasn't confirmed yet, as we didn't have the second fair value gap, but it did have the sort of sharpish turn, which is usually indicative of creating an ITH. And so this was an interesting candle, because what you had here, I know I've got a few lines, but they are, I do need them. This is the key, I'll just put that in red, this is the key line. So we stung into this 4 hour, arguably rejection candle, even though you have closed in sight, it's got a decent weight coming down, a bit more bullish strength, but no worries. And then the second candle was a big rejection here, which was great for the 2 candle rejection, because that's the sort of entry you'd want. But then in the same candle, it also ran into this daily low here, which also within the same candle you've got 2 rejections from a premium and a discount array. And so for the 2 candle rejection study, I guess, what to do when you've got this is to focus on the most recent side, right? This was the most recent price action, and that gave a rejection. And if you wanted this to actually follow through and continue downwards, you would need this to have a sort of low-ish close and not be a rejection candle, be more of a disrespect candle. But then you could have viewed it on the hourly, as that was created at 10, and seen ignore this isn't for this. Boom, a bit of respect, but it's still a pretty big candle downwards. But then you would want to see a downward continuation, and in fact you get the opposite. You get the second classic 2 candle rejection. You get a bit of a low close / no rejection, but then you get the clean sweep and reversal. And so what I wrote here was that if you encounter this dual-sided sweep on a singular candle, you want to be focusing on the most recent side of the sweep, and on the lower time frame, 1 time frame lower, just to confirm it, you would want to see, basically, I coin it instead of a 2 candle rejection, a 2 CR, a 2 DCR, so a 2 disrespect candle rejection, and that would basically be not following through with your rejection, because obviously down candle would have been continuation run, and the big wick, the big long wick, and the up candle, look at it, it's like 75% of the candle is bullish, that is sweep. So then you would then be targeting these highs here after that. I think that's it for the bar replay. So now I get onto the second part of this domino theory. So it didn't actually, that I obviously didn't get the, I didn't take short on that day, because I didn't get, I wanted to see this close a lot lower if I was going to take the short and have that 1 hour sort of confluence confirming that. It then comes back up, takes this, consolidates around, and then today we've swept this previous day high, and again you've created the classic 2 candle rejection. Bit of a rejection candle, but then a really nice rejection. So you could have, if you're actually on, because I wasn't on, and the DXY was retracing upwards, which has also helped this move. You could have got something like that, right? Easy 1 to 2 well within the context area. The only thing is here, this was a previous day low, which you would have had to go past, and obviously this previous day low, when this was like that, you did not end up passing it. But this situation was obviously a bit better, as this candle didn't reach it. So you were probably more likely to create, as this candle didn't reach it, you were more likely to create this fair value gap, even if you did get a rejection. And with that second fair value gap, that would have confirmed order flow and confirmed this as a 4 hour ITH. And then you can target this 4 hour ITL, and then subsequently you crossing this line would fail to create a new weekly fair value gap, leading to a sting in the breaker here, creating a nice potential domino theory run. And so yeah, you can actually go a bit deeper and go, well, here was the 1 hour LOD, right? Because it's no resistance, it's just a LOD, no resistance. That is something to do with fair value, but I'll remove that. No resistance, no resistance, no resistance, right? You get the idea. But then you could go a step deeper and see, all right, well, where was it on the 15 minutes? Where was the LOD? And here, order flow lag, last line of defense. And if this fails, this is already mitigated. Wicks, 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 wicks and lows, and then you're back to the same. Nothing. All the way down, all the way back down to that weekly breaker. And I posted this 2 days ago. So on day ago, Tuesday, what was it, Wednesday? Yeah, so I posted it a day ago when it was here, that I'd already sort of seen this. And seeing how this plays out now, well, we'll see. Kind of salty I didn't get in, because I was highly considering a sort of entry, sort of chasing entry on this 15-minute here, like that, targeting the 1 to 2 here, but kind of going off topic, as that would cover if you didn't make this overlap. If you didn't overlap a fair value gap with this, this would then get rid of this. You would then make this. I have my in orange. Move that to the side. You then have this fair value area overlapping this 1 hour, but it seems as if we're going to run this 1 hour candle, and a run on this would signal that you're going to go for this, and you're not you signal that you're going to go for this before retracing back into here. There is half an hour on this candle though, so I'll see what it does. If this can close here, I might put an entry just on this 1 hour, like that, as that could be pretty nice. But if not, I might still take a run entry here, but I'll see what happens in the next half an hour. And yeah, that is the case study.